Hey guys, this is JR with Top Brokers 360, and this is our weekly economic overview. Now, I've been training for the last 4 years, more than, I will say, between 1,000 to 1,500 investors in how to navigate the new trends in the US stock market. Now, you will find as well that our review will cover some currencies at some point, and you will have the opportunity to visit our site, Top Brokers 360, for more insights and trading tips day after day, and of course on our weekly economic review. Now, let's take a look at what's happening and how things are unfolding. The most important thing is to understand where we are as far as the sentiment. Sentiment will be one of the things that is characteristic of the economic week. We can have all these microeconomic indicators, but at the end of the day, the reality is, doesn't matter how good they are or how bad they are. We've been stuck in a little bit of a conundrum of what investors are expecting. You see, the US stock market is trading at all-time highs, and then you still have, following the Fear and Greed Index, you basically see how everyone is in fear. We have the reading of 41, and we actually have extreme greed pretty much a year ago. What does that mean for you as an investor and a trader? You have to understand that nobody's believing what is happening. And because nobody is believing what is happening, a potential will continue higher as far as stocks. Same is the case with the dollar-yen and how the Japanese yen is just continues the devaluation process. Now, if we take a look at what else is happening out there, you cannot have a weekly economic overview without discussing NVIDIA, and that's what we're going to do in a little bit. But the most important is, NVIDIA is not the market, but definitely is fueling the rest of the market. Now, there are just a few players that are now controlling, and there's a full concentration in the market. What that means is pretty much you will see how just a few players will contain the market. The reason for that concentration is because of the high interest rates. Before 2020 and the age of zero interest rates, pretty much cash was easy to access. That's not the case anymore. So therefore, the concentration is now a feature of the market to protect the market itself, because the vast majority of the participants, they cannot do much, and that's something that you have to pay attention. So far this week, the S&P 500 is up year to date 15.53%. If we take a look at the short-term structure of the market, nothing has changed. And one clue as far as levels that you will find on this weekly economic review is understanding pretty much how the market has been behaving in 2024, because that's what matters. And you have to look for clues at what potential reversals you have to sort of spot in the trend. Now, if we start in January of this year, what you will see is just pretty much a uptrend all the way to this level, 12%. Then you have this reversal, 5%, which is not a correction territory, and then you can call for a full extra 11%. So altogether, if you look at it here, you have something like, again, 15%, right? Give and take. But the reality is that this 5% gives you an opportunity to take in an extra 10% from that low to this point. Now, from the beginning of the year, okay, this is somewhere here. The beginning of the year, you have that 10%. Then you have the pullback or a little consolidation, and then you push higher. So this is the reality of what is happening. What you have to look is now how to play the game, how you are going to access the market. Now, every time that you see the market moving up this much, you should expect a 3% little tight pullback, right? And that's what is happening. One more time, you are at the top, so you shouldn't be surprised if by any reasons with a little bit of volatility, any macroeconomic indicator may spark that volatility that can turn into an opportunity to start adding. You don't have to actually load the boat on that one. So we shouldn't be surprised if we come moving from 545 all the way to 538. So when you visit Top Brokers 360, you will have the opportunity to figure out where you want to trade and what broker will be providing to you the best conditions to take advantage of that volatility. Because at the end of the day, you don't want to choose direction. You just want to participate in the direction that makes sense. So that's why you're here. That's why you're watching this analysis. So what I will look for, if I want to look short, I'm looking to a move all the way to 538. At such point, I will be looking to close any short positions, and I will look to engage one more time to the upside. If we actually move a little bit lower, I don't have to close any short positions thinking that I will get everything. I just need to take 60% of that move, and then I will look to reinitiate potential long positions targeting that high. If that becomes the high in the short term for the next week, I will look to go ahead and look to capture that 3% of the upside post that. Now, the other version of the story is that you want to be a buyer on the breakout. You want to buy high, sell higher. And if that's the case, being conservative, then if I'm buying the breakout, that area will be at least another 11 points. And then I will look for another 2% extension of the price of the S&P 500. That's something that you want to pay attention to. Now, of course, if we look at what is happening, now let's take a look at NVIDIA, because we cannot talk about economic review without talking about NVIDIA. NVIDIA is not the market. I will stand by my view. But what you have to pay attention is what else is happening, and that's where you want to be a trader. You want to take advantage of secondary opportunities that NVIDIA is developing. So it means if you take a look at NVIDIA only, what we see, everyone is expecting that it will make a move to 97, but this will be damaging for the market. Why? Things have changed. Before, when you look at the basket of stocks in the S&P 500 or even in the NASDAQ 100, when you look at the SPY or you look at the Qs, what was the narrative? The narrative that this stock actually had 3% of the basket. Now the stock has 8%. Now, if you do the math, 8% is not the same like 3%. It means it does matter. If NVIDIA were to drop another 10%, many would be extremely nervous. So you want to pay attention to that, okay? Now, what I would think is this the bottom? Not necessarily, but you have to pay attention that the next earnings report will be sometime in July, okay? So if this is what is happening so far, I will say that the top really happened here. And as far as levels, you will be looking to be very aware of what might happen at 111, which before the split 10-1, this was 1,110. And then to the upside, I will look to add longs only if we start breaking above 133. If we start breaking to the downside, 120, I will pay attention, and most likely, one way or another, we're looking back to go to 111. And this will be a level of interest to pay attention. Next extension level, upside targets based on the current structure that comes with a bottom with the last pullback around April this year. We're looking for 169, and then the big level, we're looking 220 if this trend persists and continue to the upside. Now, when it comes to opportunities, always remember, as I go through our analysis, please make sure to visit Top Brokers 360 for more insights. And of course, it pays for these videos. Let's continue. Now, when it comes to understanding what's next and what potential catalyst we have for the next week, we have to think about what may happen in the next 24 hours. Tomorrow will be the core PCE. Now, when we talk about inflation, we have to understand that inflation, could be persistent and might be around the corner for a massive meltdown. There is some evidence if you were to visit Trueflation, and then you enter the app, and then you visit, the aggregated is pretty bad. But if you look for, they are changing, they're growing. The US Inflation Index, trueflation.com. Wow, there's a breakdown under 2. Now, what does that mean for you? It means that you need to start paying attention to the new narratives that are going to develop in the market. If this is true, and this is always a version of the story that the US government is reporting a inflation report that is full of laggers, 3.3 is what the government is giving us, then the reality is Trueflation is talking to us that pretty much we are the target of the Federal Reserve. Why it means, or what does that mean for you? It means that this game of inflation is over. And by the time it's being reported on the government readings, it means that the monetary policy set by the Federal Reserve has been extremely restrictive, and something might start cracking, especially banks. But that's just a perspective. Now, you have to use this correctly in your assessment. Tomorrow, the most important catalyst that will shift how July will start will be PCE. So look forward to a positive reading in the benefit of traders and investors to understand that there's nothing else that the Federal Reserve has to wait, and they can start cutting rates just like the BCE did, just like Switzerland did, just like Canada did, and just like everyone else from Peru to Czech Republic already did. So that's something that you want to pay attention. Guys, thank you so much for paying attention. Please remember to come back next Friday. We will be sort of developing more content for the site, more active content for traders and investors that are looking to have the edge in either direction. Remember, you don't have to marry to any direction. That's not true. If you're going to trade, you want to just have access to levels and have a deep understanding in how those levels maybe trigger the masses and how you have to position yourself. Remember, please make sure to visit Top Brokers 360 for more insights and trading tips. Signing off, this is JR.